Thank you for being on this video with me. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you understand the level of risk in the stock market through our proprietary market risk signals that are emailed to you every weekend on our weekly stock market-based newsletter, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Monday, May 11th, 2020. For this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. What we're looking at here is a one-day chart of the S&P 500 where each candlestick represents 1 minute of trading. So what we can see here is we gapped down at the open and then slowly made our way to the positive, and just after noon this afternoon, Eastern Standard Time, the market went positive and then kind of traded sideways from there and then closed up 1 basis point for the day, and we closed at 2930.19. What we're looking at now is a year-to-date chart of the S&P 500 where each candlestick represents 1 day of trading. And I've overlaid the Fibonacci retracement levels on this entire move that we saw from February 19th, which so far has been the high in the S&P 500, to our lows on March 23rd. Of course, the lows so far, nobody knows whether that's going to be the ultimate low of this downturn or not, but so far that has been the case. And this movement that we've seen here has retraced roughly 61.8% of this entire downturn. So the question is, can we get above this 61.8% retracement level going forward? And of course that level is right around that 2935 level on the S&P 500. And we know that we've been trading predominantly sideways now for several weeks here. But of course last week was a pretty positive week. We were up 3.5% for the week. So the question really becomes, can we start to close above this level here, or are we running into overhead resistance? What we're looking at now is a 3.5-year chart of the S&P 500 where each candlestick represents 1 week of trading. This horizontal blue line is set at the 2950 level, and that really is our overhead resistance point at this time. And it's important to remember that we've only closed on the weekly candles, we've only closed above 2950 on the S&P 500 32 times in the entire history of the S&P 500. This week here, and this is the reason I drew this vertical blue line, this week back in June of 2019 was the first time, and it barely closed above 2950, but this was our first week that we ever closed above 2950 on the S&P 500, and since then we've had an additional 31 weeks where we've closed above 2950. So we're up against some serious overhead resistance at this point, and it's been less than a year ago that we first closed above 2950. And of course, the earnings for 2020 on the S&P 500 are probably going to be at least 20% below where they were for calendar year 2019. So if we're going to start closing above this overhead resistance point of 2950 and keep going, and at some point in the not too distant future, this year or next, set new all-time highs on the S&P 500, we're probably going to be doing that with higher PE ratios than what we've seen in a long time, given the fact that earnings are going to be lower this year than last, and probably lower than the last few years. So it will be challenging for the S&P 500 to get above and stay above this 2950 level. Now what we're looking at is a year-to-date chart of the S&P 500. Of course, each candlestick still represents 1 day of trading. Now I've overlaid the Fibonacci retracement levels on the recovery that we've seen so far. So let's just assume here that this is the peak for a little while, that we're running into this overhead resistance somewhere around this 2935, 2936 level. If we're running into resistance, if we are going to roll over, what we need to know is what are some downside targets. So this is just an exercise to give us some realistic downside targets if indeed we are going to pull back at least a little bit from here. So a 38.2% retracement of this move from where we are right now would take us down to somewhere around the 2650 level on the S&P 500. And if we retraced half of this move, that would take us down to somewhere, and hopefully you guys are looking at this on a larger screen so you can see this, but around 25.65. I'm just rounding these numbers. And then if we retraced 61.8% of this move, that would take us down to around 24.75. So the first level we need to concern ourselves with so far is this 26.50 level plus or minus, but that would be a 38.2% retracement of this move that we've seen so far. So if indeed the markets start to roll over, then we need to keep this 26.50 level in mind. And we know that we also have support and resistance around this 26.30 level. So somewhere between 26.30 and 26.50 or so, there's definitely going to be some support if the market does roll over and if we're hitting some overhead resistance at this point. Okay, a quick refresher on the Simple Market Signals weekly signals and how they can help you. The signals are green, yellow, and red. The green signal is the best risk-reward ratio for equity investors, and what you're going to find is that the stock market makes most of its upward progress when the signal is green, okay? The worst risk-reward ratio signal for equity investors is when the signal is red, and what you're going to find is that bear markets and the worst downturns in the stock market happen when the signal is red, like during the 07 through 09 bear market, as we see here. So again, the best risk-reward ratio signal for equity investors is when the signal is green, and the worst risk-reward signal for equity investors is when the signal is red. Thank you for watching today's video. Before you leave, don't forget to subscribe to this channel. Please give me a thumbs up on this video and check out my other YouTube videos. I have a lot of great videos on my YouTube channel. And if you would like to learn more about how simple market signals can help you in both up and down markets, you will want to watch these videos that are linked in the description box below this video.